Weekly Strategy Roundtable discussion where we talk about current market conditions and answer any questions you might have about your subscription. For those of you who are new, welcome. We have one trader. I'm not sure the name, doesn't appear, but welcome. Let me see if I can find out. Please get an email. Tariq Bhatti. Okay, welcome, Tariq. Let me know if this is your first live event. Just type in hi, Chuck, Joseph, Fred, Michael, welcome. So my background, for those of you new, we have some people that are new. Technology, I was a CTO and executive of several startups here in Chicago in fintech space, broker dealers, hedge funds. Been doing that for over 20 years, 25 years. Mentoring and teaching subscribers how to trade stock and options. And then about almost 2 years ago, Keith Harwood joined us from Options Hotline, who is our chief investment officer, and he has experience. He's over 20 years career in market making, hedge funds, money management. So brings a lot of trading perspective. So between two of us, I always say 50 years. He corrects me 45 years, but okay, close enough. 45 to 50 years of trading experience and building models and AI models and technology for finding signals in the market. And we're using these signals to manage our portfolios. So disclosure is very important, optionsclearing.com. Please visit this link to understand the risk and suitability associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we jump into a trading plan, let's look at the current market conditions. So we see technology stocks like Broadcom continue to underperform. SPX is down 71 basis points. Right. Give me 1 second. So let's look at a long-term perspective. So QQQ continues to pull back, testing 50-day moving average, broke through yesterday's low. So it's down 1.5%. We have semiconductors down almost 3%. Spiders are actually pulling back today as well, with the small caps. So we had the interest rate decision yesterday, Wednesday was the interest rate decision. Right? Spiders still near all-time high. A 25 basis points rate cut, so that's as expected. And the initial reaction was to the upside, right? Market rallied on Wednesday. Value stocks actually rallied. They're still actually holding up pretty well. So value stocks rallied, technology stocks rallied. Because Powell sounded bullish on the state of the economy, and that unemployment is still contained, inflation is going in the right decision, was pretty upbeat. But he did say that the committee was pretty divided about the forward path of future rate cuts. And also he did mention that they penciled in only one rate cut, where the street expected somewhere between 2 to 3 rate cuts next year. So it's still a period of digestion. People are thinking about what to expect next. And technology, again, overvalued. And you can see value stocks, if you look at the weekly chart, forget the daily chart. So value stocks still strong, outperformance breaking out, whether it's VTV or RSP, equal weighted S&P, are breaking out. So your banks, your industrials, your healthcare stocks are doing better. And then QQQ is a down week, right? We basically reversed all the gains from last week. QQ and semiconductors tried to break out, and then we had earnings from Oracle, earnings from Broadcom, and they're still weaker than expected, right? So that is current. So that's where we are in the market. And the next most important event is unemployment data, and that will set the tone for the end of the year and forward, right? Expected rate next, so it's next Tuesday, right? Expected rate is about 4.4, 4.5%, right? So if it is 4.4, 4.5%, I think market is going to reverse, right? Technology is getting oversold. We're right at the close to 200-day moving average, or I mean 50-day moving average. QQQ is still not there, but QQQ is semiconductors not there, but QQQ is basically at the 20 and the 50-day moving average, right? So very important setup. It's right at that 50% retracement. Oh no, let's pull it this way. Adjust it, so we're almost at 50, 62% retracement from October, November lows. Probably this is more pronounced. Okay, same thing. Okay, so at 50%, 50 to, I mean, at this point, 38% retracement from all-time high to the October, November lows, right? And we do have expiration next week. We have unemployment data, so definitely volatility will pick up, right? If the news, if you can see, if we see the uptick in unemployment beyond what the Powell projects for the next year, then I think the path of least resistance is to continue going lower, right? And we could have a steep pullback and kind of, you know, not have a Christmas rally like everybody expects usually. If unemployment data comes in within expectations or better, you know, 4.4, 4.3, 4, yeah, I think even 4.5, because that's what's expected, then you know, we're gonna most likely at that point bounce off of the 50-day moving average or below. So that's my view on the market. If you look at the stock forecast toolbox without knowing, you know, it doesn't analyze Powell's speech, it doesn't look at the decision on, I mean, unemployment data next Tuesday. It just looks at the price action, right? Price action. And the price action right now, spiders is neutral, right? If you look at the VTV, actually also neutral. Doesn't see a lot of momentum in VTV. Let's see IWM. Let's look at IWM. Actually, it sees IWM is oversold, overbought, so it's a downtrend. Carry. Neutral. All right. So market model is more bearish than I am. Or neutral on spiders, basically saying that next, you know, at the end of the year, we could be at 700 level, right? That's the main overhead resistance. That's where a lot of the positions are in December expiration next Friday at 700 level. On the downside right now, it doesn't see a lot of momentum below 670, 675, right? Where also a main support is. So I agree with the model. If you look at the 6 months, also doesn't see the momentum is deteriorating. That, I mean, we could get at 700 level, right? In December, January definitely could be 700, 710. And you know, if unemployment is still within the expectations and with a new chair starting May, I mean, we could have a 6% higher by May, right? But the first 6 months, it is reasonable to expect 6% higher. But again, we can also be at 650, right? That October, November lows, if, you know, unemployment data is worse than expected. So that's what the model sees. If you look at the SPX, so again, largest position is at 7,000. That's resistance number 1. number 2 now. 6,900. We touched 6,900 in the past 2 days. So you have 6,900 once, 7,000 resistance number 2, and support 6,800 and 6,700, right? But we've seen 6,700, that's the 50-day moving average too. So this is your support number 1, and this is your support number 2, right? So going, there's 3 scenarios, right? There's 3 scenarios going into January or even February of last year, right? Scenario number 1, we're able to break through this wall of worry, right? This is a lot of people selling calls, maybe buying puts. So 7,000, right? That's scenario number 1. We're at 7,000, 7,100 by, going into the next earnings season, because earnings still expected to be positive. And, after the unemployment data, we still have government shutdown possible in January, so people are going to worry about government shutdown, but then they're going to, at some point, they'll focus as end of December approaches, people are going to focus on earnings. So that's scenario number 1. Scenario number 2, we're trading in the range. Between 6,700 and 7,000. Right, kind of 50-day support, all-time high. And then scenario number 3, we're revisiting or breaking October, November lows, right? Unemployment, right? Unemployment data ticks up higher than expected. So how many of you? Okay, we have more people today. Great. Andre, Chuck, D, Eric, Joseph, Maynard, Rick. What do you guys think? End of this year, end of January, are we at all-time high, 7,000, 7,100? Are we scenario number 2? We're kind of just stuck in the range between all-time high and 50-day moving average? Or scenario number 3, we're going to break 50-day moving average and revisit October, November lows? Joseph, scenario number 3. Okay. Andre, scenario number 2. Range, best downturn. Okay, likely D. All right, thank you for participating. I'm going to go with 1. Again, it's a very hard decision. I think it is mainly, my decision is mainly driven by unemployment data. If the Fed committee, who has, a lot of experience in economics and, interpreting the economic data, they, a lot more than I do, and they're divided, they don't know, right? Then I definitely don't know, but I'm going to be optimistic. I'm going to say that based on initial claims, right? Initial claims and ADP data would be supportive that we're still, unemployment rate should come in within expectations. Obviously, if you look at other data, right, then you can definitely see that, job openings, right? Job openings deteriorating, people looking for new jobs deteriorating. So, it's harder to find a job. If you don't have a job, you do see uptick in, companies firing, whether it's Microsoft or Meta, a lot of people are, or what was that one, UPS. So companies are definitely letting go of people. So the balance could be tipped. But I'm going to assume that the unemployment is still contained within 4.5. And if that is the case, you can see, value stocks already broke out, right? And technology is already getting to the oversold level, right, on the sphere of evaluation. So that would be a good recipe for scenario number 1. But I do recognize that all 3 scenarios are possible, and you have to be prepared for all these 3 scenarios. So this exercise just helps you to determine how much money are you willing to risk, right? If you set scenario number 3, where's your stop level? Probably, if market breaks above 7,000, you probably want to, close your short positions or trim your close position, and vice versa. If you set 1, like I am, well, if we're going to break 50-day moving average or break through the October, November lows, right, that would be a signal to start trimming your long positions. And as long as we're trading between October, November lows and all-time highs, then, market right now is overbought. So I propose to trim some of your long positions. You know, if you follow my trades, I trimmed Caterpillar, trimmed Morgan Stanley positions. So you can see that I'm trimming the positions. You know, if it gets to 6,700, then, you know, I would, you know, get into new positions. So that is the my view on the market right now. Still cautiously optimistic. I am concerned about QQQ, right, that it's pulled back. But again, medium term, long term, and even short term trends, none of them are broken, right? And if you look at the value stocks, you can see VIX, not a lot of fear, and VTV still continues to grind higher, right, all-time highs. So how do we help our Tradespoon? Again, we have tools and models, right, and then we have portfolios. So I've kind of built it, you know, we try to divide it into categories, right? If you're an individual investor that has a trading plan and been trading for a long time, right? And you have a very specific trading plan. You know how to execute trades. You've been doing this for, you know, a couple quarters, couple years, couple decades, right? And you just need tools. And we do stock forecast toolbox, where you can type in any stock and look at the long-term, short-term predictions. We do have, you know, you can manage your portfolio. Type in, you know, today are signals, right? If you look at the signals. You can put them here and you can monitor, right? EMR is still up today. Johnson & Johnson is still up today. JP Morgan is up. You know, PWR is actually down. But you can look at some of the trade ideas, type in here, and it will give you our predicted, right? This is a predicted price for your individual positions. You can also go to a company screener and look at the long-term trend. Oh, give me 1 second, guys. Sorry, 1 second. All right, sorry about that. So these are the sectors that you can see based on the monthly prediction. This runs only, you know, once a month, and the first of each month, basically showing going into December which sectors are in negative, right? Foods and services, some of the chemicals, like Dow and chemical, and then which sectors are strong, right? Metals and miners, right? Your silver is obviously, you know, one of the strongest sectors are your miners, right? Transportation, right? Today was CHRW, right? Which, you know, I haven't seen CHRW for a very long time, but, you know, obviously it is, trucking business is doing well, right? So that would be the stock forecast toolbox and some of the tools that we offer. Based on the model, every day we do show you different signals, right? So you have active trader for aggressive short-term trader. These signals are generated every single day. What happened? Oh, open link and split window. Yay. So that's active trader. You can do more, and then you can do weekly power trader. Oh, you can only do one split window. Okay, fine. So then this is active trader, right? I can do here weekly trader. So similar approach, right? On the right-hand side, active trader, this signal gets generated every day, and these meant to be for short-term trading, right? Couple hours, couple days. And you can hold it longer. You know, sometimes I do hold it longer, but then it's kind of based on your own decision whether you think that the stock is going to continue going higher. A weekly trader, for this week, it gets published every Sunday. You can see it gets published every Sunday. And for this Sunday, for this week, Mattel, right? Mattel was an active trader signal. What else we had? Murphy Oil was an active weekly trader signal for the week. Murphy is doing well. Prudential, right, was the signal for this week, also doing okay. Active trader for today, CVS, right? CVS is still in strong uptrend. EMR in strong uptrend, right? And then JP Morgan. Some of these signals I trade, some of them I don't, right? But this is where all of our trade ideas come from these active trader, weekly trader, or monthly trader. And just it's different models that analyze different amount of time, right? It makes prediction for based on type of trading. Some people hold position for a few months, some people hold it for a few weeks, some people hold it for a few days. So that would be the different signals that we do offer on Tradespoon, right? So these are the signals. Keith and I review them every day, and active trader gets published every day. These two every week. Right? Especially some people have full-time job and they don't have time to monitor during the day, during the week. So great, this is perfect where you get your trade ideas every week, and then you generate a signal. But then you can place your trade right on Monday, and then based on your style of trading, just periodically review it. Then we have live portfolio, right? A premium portfolio based on these weekly trader signals. This week the idea was buy Morgan Stanley. Right, you buy Morgan Stanley, we give you a choice. You can buy a stock, you can buy an option, or you can buy a spread, right? There's different risk versus reward, but you can look at all of these different implementations, right? So that would be Morgan Stanley, premium services. Again, the pick is generated on Sunday. You can actually place a trade on Sunday, adjust it on Monday if it doesn't get filled, and that's how the premium service works. Right? So you can follow my trades. I do spreads. If you're more aggressive, you can do options. If you're less aggressive, you can do stock. Just depends on your style of trading. Then we do have a lead circle. A lead circle is where I trade both stock and options. Right? Today I got into JP Morgan, so I bought JP Morgan. Trying to get out of Broadcom, not going in my direction, credit put spread. So during earnings, I trade earnings strategies. So in this example was an iron condor. So it's a little bit more complicated strategy. And then you can see Morgan Stanley trying to exit the Morgan Stanley position. Closed Caterpillar stock. So you can see a combination of both stock and option trades, right? And this is something that I encourage you to consider, right? You get basically 30 days risk-free, and you can look at the lead circle. You will see all my stock and option trade. You can sign up for SMS message or Discord to get on alerts, and there is a recording, right? You can watch the recording, either participate in live trading room or watch the recordings, right? And that's what I usually recommend. If you need hand holding, if you want to see what we trade, and if you want to, more importantly, if you want to learn and ask questions, right? Then we do have live trading room every day, the first hour of trading and the last hour of trading. So that would be a lead circle. You can also do shadow trading. Just follow my trades. You don't get access to any of the tools. The lead circle gives you access to all the tools and picks as well. And if you have your own trading style, we have a lot of subscribers that don't need guidance. They know how to do it. They don't need to ask questions. So then, they just look for models, right? Models and output. So you have these tools, picks. And we have research, kind of your traditional seasonal charts. You can look, 58% correlation on the SPY, but usually this time of the year it does go higher, but model actually predicting lower. now. So we do see some contrarian views, and you can look at the probabilities, right? Okay, so 680 is your main support, 700 is your main overhead resistance, and this is something that everybody's watching right now. All right, any questions? Gold and silver, I mean, my thoughts, especially silver, it's definitely overbought, sorry. But momentum is extremely strong. You know, we still have inflation, we still have trillions of dollars of debt. So I think it's still going higher, but I would not chase it at these levels. I would wait for a pullback, right? Because you do have these pullbacks, and then you want to go to some kind of, you know, 10, 15, 20% pullbacks. You know, it's especially in silver. Gold, you know, I would wait for a breakout. I think it's coming, but it's hard to say whether it's going to be done this December or January, but I would wait for a breakout before I would chase gold. And same thing, silver, I would just wait for a pullback, right? I would wait for these pullbacks, and you can see today is kind of a risk-off trade across the board, whether it's SMH or, you know, spiders or QQQ. All right, any other questions? All right, if there are no other questions, I hope to see you in the live trading room. You can sign up here, click on pricing, select which service makes sense for you. We do have 30-day money-back guarantee, which you can sign up. And I will see you, you know, hopefully in the live trading room, or I will see you next week, same time. Thank you very much and have a great day. D, thank you, D Trader. Thank you very much. Thank you for guys for joining. A lot of people today. So Andre, Chuck, D, Don, Joseph, Maynard, Trader, Tariq, and everybody else. Thank you very much and have a great day.